I think this new type of channel, like what is it called, stage or whatever, I think it's kind of nice because it's a little more organized as it seems and perfect for something like that. Unfortunately, I can't, or I can, but it's a lot of work, and I have planned to do this with WAP, but we have problems with one WAP right now. But maybe I will implement something that you guys can see the chat also on the screen recording. But as said, that's a little more difficult. I've set up this for WAP. Now WAP is not working anymore, so I won't be able to do that today. But I will just read out questions loud so everybody that's listening and not live um, can be is also hearing the questions. Okay, I think we start. Nice that you guys are here. I will start with a little rant about historic PA and all that because I think people spend way too less time to study this, and I really love doing this. This is kind of one of my most favorite things to do, connecting the dots and all that. And it will also give you some kind of advantage for above all those who don't do this kind of thing, because, like Manitor said, timing in the market is everything. And when you're able to figure out the timing, you're a step ahead, of course. So what we want to do is we want to look at historic PA, and we want to make sure to not force our bias. And usually it doesn't play one to one. So if something happened before, usually it's not exactly the same, or it's a little bit twisted or tweaked so that the ones who are thinking about this and trying to puzzle it together are a little like distracted or confused, because usually it's a little off for a few days, for a few months, so it doesn't play day by day. But price tends to repeat itself because price is nothing else but the collection of human psychology. And so price is made and designed to trigger certain emotions around certain key levels. This is how whales create liquidity. And so price tends to repeat itself, especially because some things just work so good for whales. They're going to repeat this over and over and over until it doesn't work anymore. But for what I can tell, they're doing this since decades, if not centuries already. And it seems to work like perfectly. And it became even worse or even more efficient for them because now they have all the data and everything is connected nowadays. And so they know exactly when people are going to do something. And I don't know if you remember this big discussion around the mid 2010s when there was this big data um, like yeah topic of Cambridge Analytica and all that, like collecting the data. And I was always telling people, it's not important that the government knows that you're going to drink your coffee at 4 p.m. Whatever. No, nobody cares about that. But it's the metadata, like the collection of all data together, which give them the perfect picture of what does the herd do and what does the herd wants to hear. That's good for buying votes. That's good for the market. That's good for so many things. Not because of you as individual. I mean, if you're a criminal, of course, or do something the government doesn't like, they can track you with that. But overall, it's not about you, about a single person. It's about the collective of all of us. And nowadays, they have all this data, and especially in the market, they know exactly what they do, what they want to do at what point in time to trigger those emotions and to make people act on something. Um, no, boys, is there an issue with my Discord, or did NC not start speaking? I hope I didn't do this rant just for myself. It's an issue with my Discord. I can hear the audio and videos. Can't hear audio and videos also. Good question, but unfortunately I can't answer it. But I hope your other guys hear me. Brunji said he can't hear me, so I think it should be good. Now I can also see my little window here lighting up. So I think my voice should be fine. So the question now is, how do we apply this to the charts with all the knowledge I told you right now? How do we apply this to the charts? First of all, it's very important that we don't have a bias, because if we have a bias, usually the mind is not trained to ignore the bias, and we usually look for clues and for hints that validates our bias. This is definitely not what we want to do, but if you have a bias, if you have an idea, you have to go after it, of course. You need to look for proof, for hints and all that. And if you do that, make sure that you don't ignore the other side. So if you have a strong bias, for example, and you get clues and information that is not according to your bias, do not rule it out. Do not say, oh no, that's not important, because make sure that you're really neutral. You need to think like a scientist, like making a study, and you need to be as neutral as possible. But of course, some ideas are more likely than others, and you should go after them if you think they're more true. So what my base case was always that this summer is going to be very positive. And to be honest, I expected something like this. From this area, a quick recovery. And the first thing we can already see is that it's not like it was. So first of all, we had this big rally. We never came back to the space down here. So the correction was significant, no doubt about this, but we never came back as much. This cycle is a lot worse for most, even though the correction was not as big, but the pump was also not as big. So overall, people are like back at zero or even worse, because they sold this and they bought only the low cap shitcoins. But overall, people were back to break even, which was not the case here. So that's why 2021 felt so much better for most people, because if you bought somewhere in these legs up, you were still like break even, or maybe you bought even a little bit lower. So you were up, and you only probably were underwater in the bear market, or you bought all the way on the way up. So you were deep underwater already in this leg down. But overall, this cycle feels a lot worse for most people, because as said, we came back to the base here. Still, we had this big correction here into the early year. Like the correction started in May back then, and we started recovering in July. So it's not the same. I mean, we topped here in December already, and we really trended down aggressive also in Q1, even though here it was Q2 already. And then we found a bottom early in the year. We pumped again. We formed another bottom, and now we're pumping again. It was quite different here, because this was just one big leg up. We had smaller corrections here, and then we had a bigger correction here. And why I was looking at this today was because the summer of 21 was such an impressive moment in time for most people, because first of all, lockdowns were went a little more loose, if that's the right expression for that. So people were able to do the things they love again. They were free. Also, the market pumped aggressively, almost no looking back, just going up, 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 up. We had some smaller corrections around here, the first big area of supply here, and it was something like a 12 to 14% correction. And this was just a few days. Probably I wasn't as deep in the market as I am today, but the correction was only a few days. So it probably felt bad for people, almost like a bear market after such a long time of up only. And then we had these corrections on the way up. But then we had one last leg up, which wasn't able to take out these highs, which was probably like something like market makers did on purpose, because with this correction, many people went probably very bearish, and see how fast this went. Like the amount of destruction here in this one daily candle is just so massive. And I mean, it bounced back up, but this is like, this was a very bad day for people probably. And it was on the 7th of September. And then we had this bigger correction of 30%, but it was only 16 days. But imagine after such a long time of up only, how this must felt. Like this 16 days was probably like, it was over. We weren't able to take out those highs, but we did after. We created probably a higher time frame swing failure pattern and then higher high, and that's it. What I really like on this comparison is, as said, we found this bottom on on mid of July, which is 1 month later. Then we found this bottom, and we had also, this is not very much comparable, but we had also this bottom earlier in the year, which was also almost the absolute bottom here. I mean, if you bought here and it bounced and it came back, it probably was painful and you thought it's going to go lower. And then the same thing happened again, because these times of capitulations into the bottom, even though we haven't seen much lower lows, those feel very worse. And if you have looked at the low time frame the last few days, you know what I mean, because the bottom basically looked like this. We entered key level, we had a big bounce, we rejected. On some coins, we took out the lows, which felt very bearish. We had another little relief bounce where we thought, oh, no, nice, it's going up. And then we had another retest of this demand area. And these bottoms feel very worse. And usually people are not as bearish here, because they say, you need to buy the blood. Yes, yes, yes. And then it goes up, and then your expectations rise, and then you say, yes, now I made it, I bought the bottom. But then it comes back, it goes even lower, stops you out at break even. Maybe you feel like, oh, I didn't take enough profits or whatever. Stops you out at break even, or it doesn't, but you think, oh, it's going lower. And then it bounces back up, you buy back in again because you say, oh no, that's the bottom, it must be a double bottom or whatever. And then it comes back again. And this is usually, people get, with every little drop, people get bearisher. And I mean, that's reasonable, because every time we touch this area, it gets a little weaker. But still, these kind of bottoms feel so worse to people that they're so powerful. Usually, the worst kind of entries, so if the entry feels very, very bad, usually that's one of the best entries you can get. And this was probably the case here. As said, I wasn't as deep in the market back then. Then we have this sharp recovery. We have a sharp recovery here, and we came back to test this demand here to fill whale specs. If you look at this complete area, it's probably exactly back into this area where whales accumulated the most. So we retested this, they were able to fill their bags, and since then it was up only again. And in my opinion, we are somewhere in this stage where we have smaller corrections here on the way up. And everything I'm saying here is just my opinion. I can't know either. I'm trying to prepare for everything, and this is just my base case for now. I think we're going to see one more of something like this, a leg up. If we're going to take out this high or not is something that I can't know yet. Maybe they create this swing failure pattern, maybe they don't. This definitely creates more short liquidity because they think it's a lower high. People will probably put their stop somewhere in this area. And so this leg up could be cheaper for whales. But we could also create a swing failure pattern, which will create a lot of breakout liquidity, like long breakout longers. And then we nuke back down. Probably, that's also something I can't know yet. But the error is just to visualize the timing. It's not so much about the absolute target, because if we reach this area, we will know, we will see the signs. If you create something like this, swing failure pattern, it's clear. If you create something like this, and the local structure here breaks down, the tide turns against you, you can always decide to sell. But I will definitely sell some spot here, and I will show you on ETH my exact plan, how to do that for ETH and how to do that for Doge, because these are my biggest spot backs. But what I found most interesting was that we bottomed here around the 22nd of June, 22nd, more or less, plus minus, which was more or less 20th of July, which was, if you compare it, 1 month earlier. And this is what I mean with a little stepping stone, because oftentimes they move it 1 or 2 months, and it just doesn't make sense on the first impression, because yeah, it was July and this was June. But the overall summer idea is not that it's the perfect date. The overall summer top idea is that people are going to be euphoric in the summer. Most people and most volume is created on the northern hemisphere. And in the summertime, people usually go partying, they drink, they have fun. There's football and television, and all that makes people emotional, euphoric. So creating a top around the summer, they don't do that very often. Usually the summer is very boring. But sometimes the top occurs around the summertime, and these are usually the most aggressive tops, or the major tops, let's say. Let's call them major tops. And you see, we had pretty much no correction on the way up. We had the first correction in August, and we had one on the 23rd and on the 16th of August. which would be, in our case, the 21st of July, which is exactly, again, 1 month before August. So if we call this like the 23rd, it's 1 month minus 2 days. It's 34 days. And also here we have something like 30 days. So it's quite similar. I'm not saying that this is playing out perfectly, as mentioned. It's an idea of many, but we are holding this key level right now. We are bouncing from this key level. This correction here was 13%, which also aligns with this correction. Probably it would be a lot easier if I were around this time in the market, because then I would know what the sentiment was like and all that. But as said, I was like more like a passive participant, and I was calling crypto a scam anyway. But we pumped them out of this low in the next. We found the bottom on the 26th of August. We had 11 days of relief pump or continuation of the trend, which would align with the early August. Sorry, this was a little too far. With the 4th of August, which also aligns with the crypto week, the crypto conference or whatever they call it, for this top here. We saw a massive correction of 30%, and this is like total destruction for many coins probably, or at least like a really big correction. And if you imagine this would play out exactly like this, we could even imagine we go down to this area, which would be in 11 days, a 30% drop would probably feel like very, very scary. Many people will go giga bearish here, would probably sold everything, and then we have the next big relief bounce, potentially to the best case targets. But as said, I take it level by level. So if this level doesn't hold, the whole idea doesn't make sense anymore. If something changes from the script, I'm invalidating my idea immediately. But until everything plays out like I've planned and we don't break down this level, if we break down the level here, the idea is invalidated. If we just go higher from here, the idea is invalidated. If this is a swing failure pattern or if it's a lower high, doesn't matter so much. It needs to be seen what the order flow says once we do this or once we do this. Both make sense from a liquidity perspective, and one of those two will probably play. If the correction will be as big, remains to be seen. But if it does, this will be total destruction before the last final leg up. And we had on the 10th of November, there was this top, which would be, if we say it's 1 month minus 2 days earlier, it's around the 8th of October. And this is, as said, this is just an idea. For now, everything seems to repeat itself a little bit if we see this correction. So I will definitely be a seller. It doesn't matter if it's here or here. I will try to short this top swing failure pattern or not. Doesn't really matter to me. I will sell some of my spot holdings. Of course, if you break this level down, I'm also selling something, removing risk, closing my longs, all that, of course. Probably selling something of spot as well. This is also based on order flow, but you see, if we break this low down here, the risk to reward for holding those spot plays is not as good. If I expect this to be happening first, I would pay another probably 20% back on my holdings, because this is total 2, doesn't resemble the single coins. And the upside to this level, it's like 1 hour. So because as long as this is not broken, as long as we don't saw a reaction from here, I say this is strong support. And if I don't cut my bags here, it's a 1 to 1 hour. It just doesn't make sense to hold the spot bags into those levels. I can sell them here, try to come buy back lower. And if this isn't the case, I'm still, from my major entries, I'm still up 50% here. And if I sell here, it's 45%. So anyway, I'm going to make a profit. The question is, how far can I push those trades? Because these are swing trades for me, and the idea is to push them as far as I can, because those swings don't happen every week, and if they happen, I want to push this trade as far as reasonable possible. And that's why I try to long with perps and all that, or short major resistance in order to sell, because this is just, as said, these swing trades just needs to be pushed as long as reasonable possible, in my opinion. And if we break the structure down here, there is a clear invalidation, but as long as this level is holding, I see no reason to sell them here. I try to add to this winning idea because the winning idea is still playing. The whole thesis is playing. So I added more risk. I sold some of my longs here, and I added this risk back because I add to the same idea. And as said, I will probably be net negative or net neutral once we reach this level. Now I'm net long, and then we will see what happens. If we're going to repeat this 30% drop early August makes total sense. As said, crypto week, all those crypto related real world events make total sense. And then we can long maybe for a best case, which would also be a higher time frame, 3 drives, more or less. And then probably the real destruction begins, especially because retail or most people think winter and Q4 is always bullish for crypto. So something like this makes perfect sense. This would be the first big leg down if it repeats in a similar fashion, which is like 50%. Then we have the counter trend bounce, which looks bullish again because it's an uptrending channel more or less. We have some kind of counter trend bounce, which can be traded, of course, but this is something I probably won't long on spot because I don't want to have too much exposure all throughout this, because for those of you who were around, you know what happened during this legs down. So one after another, exchange went bust, or lending company and whatever, and coins were missing and blah blah. The whole money system and the whole scam system was breaking down because the money was just not there. And what it makes also sense after that is that we're going to take out those lows because this looks just so bearish. Usually we correct around 80% for altcoins, and let's imagine it's something similar again, which would be in this area. I mean, would be totally crazy for people probably if we take even those lows, but something in this area. I mean, this is probably strong demand, but if we lose this structure, maybe wick below these, something like that, would be the perfect crypto bear market in my opinion. And so, as mentioned, this is my base case for now. This is my main thesis, but I take it level by level because this is just the timing confluence. I try to figure out the timing as good as I can, but it's also necessary that you don't force your bias too much. I won't be the one who is just waiting for this error to play out if structure is breaking down here. It just doesn't make sense to hold on to this idea if it's not playing. And as long as it plays, I see no reason to invalidate it. It's as simple as that. As long as these levels are holding, as long as this low is holding, everything is fine. If it doesn't, I need to manage my positions differently. And so yes, this is the base case. And I really, I can only tell you to really study historic price action and study the market, not just trading all day long, because of course you get better in executing trades, you get to know your mental game if you reflect on that. But in my opinion, people spend way too less time to figure out this timing component. And the most impressive thing, in my opinion, that Money Tower does is the amount of timing confluence he has in this analysis, because I have not seen a single trader talking about what's happening in a year from now. And he is able to predict this in some kind of, in some form. And look at this, if this is something, if this is going to play and we bottom around January and the relief bounce into Chinese New Year, which he mentioned, would also not so bad here with this little error, that we do something like that. And as said, take it level by level, don't force your bias, but try to figure this timing component. Because why are people so scared all the way up of selling their spot backs too late and all that? First of all, I want to address this as well. First of all, to make money, you don't need to sell here on this exact day. You don't need to do this. This is not necessary. What you want to do is, when the structure breaks down, you want to sell in this area here. We are talking about a 10% area, 15% area, which is the top. You can also sell here. Once you see this support and resistance flip here on the supply, we reject. Okay, you didn't sell the Pico top. Great, you sell for 10% lower. But if you bought the bottom, which you hopefully did, if you sell at 87% or 100%, it doesn't really matter. The question is, what is the RR? what is the RR? And in this leg up, what is the RR if you say the potential upside compared to if this little pullback here, and we're talking about a 11% pullback, something similar like now, those pullbacks feel very, very scary because it's up only and then it's suddenly red. And usually people are very scared during these small pullbacks, but they're not scared anymore once this happens. It's so interesting because at this area, most people are so scared of paying it all back, but once this is happening, everybody loses completely the sense of reality and says, oh yes, it's going to go higher, we're going to the best case target and all that. Look at this, we knew lower, we even left this daily block here. This is something, and the same thing happened on ETH on the 4-day. This is some, if you see something like this crazy big sell-off, like this is a sell-off. This is something that happens around tops, in my opinion. These big red candles, these are your sign to sell around the top. And it's not about the pico top, it's not about perfection, it's about selling on the way up, locking in some gains, and getting out as high as you can. Pushing those trades as long as reasonable possible. Another very simple trick is to just mark out some trend, some like momentum. And once this breaks, it breaks the demand, it breaks the trend line. Yeah, of course, you probably sold maybe a little lower. If you sold the wick, it's like that's ugly, but usually it bounces back and then you have another chance to get out. So this is really something you should learn, because then you're not always scared on the way up and bullish at the top and then bullish on the way down, only to flip bearish again once we broke all the structure on the way down. This is usually what people do. And you see how crazy fast those legs are. On the way up, it's so fast because this is what people make so euphoric. And on the way down, they give it a little more time, a little more room for people to think. And then they say, oh yeah, there's a bottom forming and now it's going higher and we're going to higher targets and all that. On the way up, you usually don't have time to think. And on the way down, you have a lot of time to think that it will go higher until it doesn't. And then you didn't sell the top, and then you just want to have this little pullback where you can sell around the top and it never comes. And this is usually what happens all the time. It was a lot more aggressive back in the days. People are saying these cycles are a lot easier. If I look at the chart, I don't think so. But usually it's not going down in a complete straight line. You have these big red candles at some point in time, and they are your time to leave the sinking ship. Because as said, if you bought the bottom, you're still up. And on average, we're talking about total 2 here. Yeah, most coins probably did some kind of 2, 3, 4, 5x on the way up. And if you sold on this big first red candle, you're still up a significant amount of money. And this is what you should learn. Even though this is my base case, as said, take it level by level. If we do this, I will probably sell anyway. And if we break down, I can always decide to sell more. And if we come back to retest those levels, I will add back those gains. And I can compound this like limitless. I can limitless compound those gains if I just sell on the way up, sell around the top, put back those gains, make a plan for this, because this should be the easy part of the game. And trading itself, trading lower time frame and trading everything in between is usually the harder part. But people got wrecked so many times with spot that they're so scared now and they don't make plans for that. It should be the easy part of the game. For most, it's not. But as mentioned, if you understand this, if you understand the cycles, that it's going to repeat itself and all that, you just buy around this area, you just sell around this area. Best case, it goes even higher, and you can sell even higher, and you trail, your momentum trail, or you add back or whatever. There's so many options to do this. You just need to make a plan, a proper plan for that. And back to ETH. ETH is looking quite good here. I think if we break those highs, probably reject a little bit from here, but I think overall doesn't look too bad. Let me use another chart. It's so messy. The thing is, on ETH, you see breakdown of the structure, you could always sell. Same here, that's why I sold my longs, because we broke the structure down. There wasn't a big candle, we have not left behind some levels. As mentioned before, there's this 4-day level. I always leave this marked because you don't need to sell the pico top, you don't need to short the pico top. If you can, great, but if you don't, look for retests, look for those big sell-offs and come out around the top. Also, if you bought ETH around this area, you either sold for 70% or you sold for 50%. Either way, you make a profit. You only don't make a profit if you don't sell at all and hold back your bag. I mean, if you bought around here and you didn't sell anything, you're down 40%, which was probably happening for most people. Something like that was probably happening for most people. And as mentioned, you see once those trends break, usually with a big red candle, here's an exception, then you know to get out. But this was, anyway, this was the ETF scam pump. Most people probably didn't caught this one. They probably bought just here. But overall, if you're able to buy some bottoms, you should be up significant, and you should not be so scared all the time to not sell the Pico top. And we have this monthly order block. So for ETH, I have a different idea than Total 2, because I think what makes perfect sense here for ETH to take out those highs, because it will create a lot of breakout liquidity. Why is this so off? And yeah, as mentioned, it makes total sense to create the swing failure pattern. So I see it's more likely, in my opinion, for now, as long as we hold those lows, as long as we keep on doing what we're doing here, I think we are going to, where's my arrow? I think we're going to do something like this. Maybe then the correction, which I drew on Total 2. And maybe this is just speculation. Don't take my word. Don't take it for granted. Maybe this is a little extreme. Whatever. I could also see ETH doing this, losing $1,000 again, which would be the total destruction for this coin, and everybody will call it that. But I guess ETH will stay. I don't think ETH will die, because it's just too big already, and ETFs and all that crap. So, but what makes total sense to me is that we are just going to take out this high here, because it would create so much liquidity, finally breaking 4K after 3 touches, finally breaking 4K. People would get so bearish and say, now we break the all-time high, there's nothing in between anymore. And after the swing failure pattern, we have this bigger correction and potentially a recovery, maybe like this, maybe like this. Yeah, so from a market maker perspective, it just makes sense to do this because it would create so much liquidity. I mean, they could also do something like this, but from a liquidity perspective, if they, let's say they want to trap as much longs as possible, they want to attract as much spot buyers as possible, it probably makes more sense to do this. But also here, this is a prediction. This is not like, I don't have a glass ball. I cannot predict the future. It's just an assumption and a prediction how I would create most liquidity if I were a market maker. I always like to think it that way because this is just how the market moves. We have this untouched block here. And as mentioned, breaking 4K, psychological level, the resistance where everybody got dragged, but everybody didn't sell ETH. And we finally break it. People would be so euphoric. Everything happened during the summer. Let's imagine it's the, what did I say, 4th of August, right? And we have not so much time left. This would come very quick. People would suddenly turn giga bullish again. We maybe correct, what did I say, what was it, 15 days or whatever? The aggressive correction, 30%. Yeah, let's say 15 to 20 days. This is not rocket science. It's an emotional market, which would also be very aggressive. Oops. Into late August. And then we start pumping again, only for people to think it's time for the bullish Q4, and we're pumping already in Q4 and all that. And probably it will be over sooner than most would like to accept. And which is also creating another more or less big swing failure pattern, all-time high, which creates more bullish sentiment. All this makes just a lot of sense to me. If anything changes, of course I will update you, and of course I will take it level by level as mentioned. But for long as everything plays out like I told you today, I really see no reason to be too bearish. Make sure you lock in gains, make sure you're prepared for the unprepared. So plan for the most bullish case, plan for the most bearish case, have different ideas, and then try to cover them all somehow. Take profits on the way up. You don't need to sell everything. So this is also something I see people make. They think if they sell as much as possible. No, stay prepared for every outcome. So stay prepared for higher prices, but stay prepared for lower prices. Always have a certain amount of your portfolio in cash, so you can rebuy, you can reallocate once prices go down again. This is really important. Take profits on the way up. If you don't have longs running, you should probably take profits on your spot plays, because we can't know what's going to happen. Even though this makes total sense if I explain it to you like this, it could be wrong. It could just be wrong. It's just probability. So make sure you're locking gains, that you're always able to react and and that you're prepared for an earlier correction. Let's imagine we correct from here. You really wanna have some money to reallocate at these levels. If you didn't take profits, you will look at this and you will get very fearful and very scared here, because you say, damn, why didn't I sell? Why didn't I sell? I did the same mistake again. So make sure you lock in gains, but make also sure you stay prepared for this, because if let's imagine you sell everything and this is not going to play, even though it makes total sense, you could also do this. You just blast through everything here and then go lower, and you sold everything here, and then you say, damn, oh no, I missed it. And then you have FOMO, and then it pumps another 20, 30, 50%, whatever. And you will look at this, and we're talking about ETH here, so you can imagine what happens if ETH does this to other altcoins, and you sold everything, and then you get FOMO, and then you start buying here again, because everything is just so bullish. We're going higher, we're going to 10K, blah, blah. Because this will be the sentiment. If we do this, the sentiment will not be, oh yeah, this is the top, and we will sell here because we want to make money. No, the sentiment is going to be, ETH is going to 10K, ETH is going to 20K, ETH is the new like world coin for, I don't know what, for everything, more or less. And so, and you will feel like that, because if you're not like, if you don't have years of experience, you will probably also have those emotions. Think about it. When did a bottom ever feel like a bottom to you? When did a top ever feel like a top to you? I would argue it never felt like this, because it's always hard to buy here and it's always hard to sell here. If it's still easy, if you still say, oh, this is probably the top and I really need to sell, if it feels too easy, usually the move is not done. It always depends on your level of expertise, of course, but if I see many people talking about, oh, should I take profit here, and oh, I paid so much back last time, and this is usually not the time when it topped. Also on the way up here, people were really very skeptical, and perfectly around those highs, I saw no one talking about taking profit anymore. It really disappeared. And it's so interesting how market makers, or whales in general, create those emotions and those feelings like with a precision. It's almost crazy. It's like, it's nuts how precise they can do this. So look at your own emotions and try to prepare for every outcome. Map out different ideas. Don't just map out one idea, but plan for several different outcomes. So if you hit those levels, if you reject from here, you want to make sure to lock in some gains. If you haven't already, you should probably do it right now. Just that you have some cash on the sidelines, and with this cash, you can reallocate on the way down, but you're still good exposed long, so you're not FOMOing if prices go higher than expected. So this is really how you prepare for every outcome. And this is how you should map out your ideas and your plans all the time, for every trade, for every time frame, but especially when swing trading, because there will be so much time in between. I mean, we're talking about months already, and it doesn't matter what plan you made here. You probably feel very different here, and you will feel very different here, and you felt very different here. Make your plan, map it out, and take it level by level. It either validates itself or it invalidates itself. Learn to think that way, and everything becomes a lot easier. Okay, guys, this was my little rant. I hope you have had something valuable in that. You can now ask your questions. We have around 15 minutes left. So if you have some questions, let me know. Also interesting, I had mapped out this little arrow. We seem to leave it right now. I mean, it played kind of perfectly until here. Now we leave it. This arrow is more like a timing perspective because I also think that the stock market will face some kind of top. It won't be as aggressive as crypto, in my opinion, but it will definitely be a significant correction. And now it's leaving my arrow. Do I invalidate the ID here already? No, I don't, because if you don't just trending higher from here, breaking this minus 618, I still think this arrow is somehow in play, that we're going to range around here and they're going to be lower here. The exact prices is something I cannot know, but as long as we don't trend aggressively out of here, or as long as we start to go down around this time, I still think this idea is kind of valid. I don't trade this chart too much. It's just confluence for me to see what the US stock market does. Zero clue. You expect a drop by the first week of August. Did I get that right? Yes. I think if this is going to play, what my thesis from this leg here is going to play, it's going to be first week of August to 4th. So my favorite day is 4th because this would be perfect, but as we know, perfect there is nothing perfect in the market. But I marked out the 4th, could be the 6th, could be the 10th. The signs will be there. You will see the sentiment, you will see your own feelings, you will see everything, you will see where prices, if it's here or there, all those things. But yes, overall, I think first week of August, early August is probably some kind of correction with a recovery later in August. Also nice confluence. Should ETH go for this monthly block, we have also some kind of supply here again, which is percentage-wise makes sense, depends on what Bitcoin does, of course. So as mentioned, the correction from here just makes sense. We have a lot of levels below, so don't forget to take profits. It's been months since I left all those Telegram groups, and I still sometimes FOMO. Is this something which can help me to not FOMO? Sorry, I know this is off topic. No, that's totally fine. There is no off topic questions. These live streams are for you guys. So if I'm starting a topic, it doesn't matter what questions you have. You can use these live streams to ask them. Yeah, to not FOMO. I mean, you need to develop self-control, discipline. I really like to address those things very often, as most people probably know by now. Usually people don't want to hear this too much, but I think what helps me the most are those habits. It's like doing exercises, doing the things that are hard for me, like doing cold plunges, cold showers, exercising, even though I don't feel like it sometimes. Meditation, my mind hates meditation, to be honest, but it's really helpful. Breathing techniques, all that, because usually people think the problem is on the chart, and of course for a beginner who's not able to read the chart, the problem is on the chart. But we all know Monitor's edge, and from what I've seen from you guys, you all know how to read the charts properly, more or less. But the problem lays oftentimes in our habits and in our missing ability to control ourselves. And if you think about it, the whole world is designed to trigger emotions, to make you feel good, to just enjoy, to just like losing control, more or less. I mean, look at all those tech companies, how they design their apps. It's made that you lose control over your time and over your actions. And so we really need to learn to control our lives again and our behavior. And you can do this by doing the things that are hard for you and implementing the right habits, reading the right books. Reading in general helps a lot. And the market is nothing else but like the pure crack version of those social media drugs, because as mentioned, they have all the data. They know exactly when you will FOMO, when you will have that feeling. If you don't have the self-control, they will take control of you. So you really need to develop this kind of control, this discipline, to be able to don't FOMO anymore. And another thing of FOMO is get exposure at the lows. Buy when you're really scared. We are again at the topic of doing the things that are hard for you, not buy when you feel good, because usually if you feel good about buying, it's not a good time, and if you feel bad about buying, it's a good time to buy, and vice versa, of course. And what's also important, this was what I mentioned with, don't sell everything just because you think this is it, because if it's not it, if it does this before and you sold everything here, you will get FOMO because you think, damn, I missed it. I sold too early and all that. Take partial profits. Take whatever, 30%, 40%, 50%, whatever feels comfortable, whatever makes sense with your portfolio size. I will probably take profits between 35 and 45% at this level. And if you break down, probably even more, because I think ETH has not much to run from here. And look at this. If I imagine we do exactly, we follow my arrow and we do this, and I say, oops, and I say we go back to those levels. Look at this, it's like the 30% correction. And I say my best case is like 6K or whatever. Well, this is not a good trade to take. This is not a good risk to reward. So I will probably sell even more than 50%, but only if you break the structure down. I will sell probably 50 to 60% because the RR is just not given. If we get this correction, I can always reallocate here. If we get to 6K, I have not missed so much. So I mean, I bought it around 1.8K. I'm up around 100%. If you go here, it's at 150, and if you go here, it's 200%. So it's another extra 50% for my entry. That's great, but the risk is also very high from here. So I just lock in more gains, expect this correction, and then I add my profits back. But I never sell everything. I probably will here, but still, it's always wise to keep a little bit, because if your thesis is wrong, if it goes a little higher than you expected, you really don't want to be completely sidelined. And as said, if the tide turns against you, if the trend breaks, we will have something similar here at Top Farms. Big red candle, break of the structure, break of the trend, and then you can still get out. Maybe it's 10% less. Okay, who cares? You still made money and you still were prepared for higher prices. So you hedge yourself against your own emotions with that. I would really recommend you learn this. And focus on your habits, as I said. Focus on your discipline. Hoodstock, would you also add removing exposure to social media and other sources of noise? Yeah, exactly. So to be honest, I don't use social media besides X. I sometimes catch myself like scrolling uselessly, but usually I do it with intention. I want to see what's going on, what's the news, what's the sentiment, what kind of garbage do they release onto the herd around certain key levels, because I want to improve my game. I want to be able to read those signs, but I try to do everything with intent and control. As said, sometimes I just scroll mindlessly, happens, but maybe it's 10 to 20% of what I do in scrolling. The rest is very much with intent. I just go for certain websites or certain channels to see what they're saying and thinking, like Watch Your Guru and all that, and I not even follow them, because I don't want to see anything from them. If I don't want to see it, I prepare for it, and then I open it because I do it with intent. And I mean, I use YouTube, of course, but YouTube is not something I do mindlessly. Sometimes I use it to distract myself or to watch some ski videos or whatever, what I like, because life should also be fun. But I usually don't waste too much time. So the ones who really stole my time were Instagram, and I used TikTok for 1 week, but it was really not mine. Couldn't get anything out of it. And yeah, so Instagram was probably the worst for me because of all the ski videos and that. So they really hooked me. The algorithm knew exactly what I wanted to see, and they feeded me that in the right dose. So I was pretty much addicted after a very short time. And I cut all this, since almost 1 or 2 years by now. And I'm pretty happy with that. And so, and yeah, it helps a lot with keeping up my focus and being more disciplined and all that. Because if you start your day, or if you spend an hour or 2 hours a day scrolling, in my opinion, this kind of behavior scrolling is even worse than most of the drugs we have nowadays, because people think there is no downside to it. But if you're really aware of yourself and you scroll 1 or 2 hours, useless shit, mindless shit, you will feel horrible, or at least I do. I feel like almost like a little bit depressed, no motivation anymore, and so I think social media is really something bad for most people if you don't do it with intent. Zero clue. September will be the time for World Finance coin launch. The eagle will soar. How do you interpret that? Bearish or bullish? Yeah, I don't care too much about those things, to be honest. I mean, if I look at this chart, it's like one big meat grinder, and I really don't care about this. If we imagine like we have time until October, like the thing I mapped out here, which is just, as mentioned, it's just a theory, it's just a thesis, we take it level by level. But let's imagine we do this. It would probably be within this leg up, you see, in the middle of the leg, should be this launch. Do I care about this? No, not at all. I now have it noted in the back of my mind because I didn't even know. So yeah, but in the end, I don't care, because these coins, if we look at it, these coins are usually not very tradable. Have we a coin already? A ticker already? I mean, I don't know if it's the right one, but probably it's example enough. If somebody could tell me if it's the right one or not, I said I'm not into this. I really only trade majors most of the time. I mean, yeah, you can speculate on that, but the question is, what would be your trade look like to make it sense, or a meaning, or a trade that makes sense? Your stop loss would probably be 100%. No, but let's imagine you do it below these lows. The stop loss is around 60%. And imagine your thesis is right, and we go to this. It's a 3-hour trade. We have maybe a 13-hour trade. Maybe if it goes pretty crazy, you can make like something crazy out of that. But the question is, how likely is that? And in the end, this, yeah, it looks more like a casino ticket, a lottery ticket to me. If you're able to handle this stuff, there is money to be made, of course, if it's the right ticker, by the way. But yeah, in the end, as I said, it's about RR. If this is going to happen, congratulations. But if this is not happening, it's still just a 5-hour trade, and you can trade them with more, like safer. You can play safer trades with the same R, because you never know what these scam coins, because this is just one big scam, and you never know what they're going to do. And it can also do this before it does this, and then you will probably sell the lows, made some loss, it pumps again, you get emotional, because you always need to consider every trade you take has a cost. If it's not a monetary cost, it's a mental cost, because you drain your mental energy every time. You need to be in control of yourself, you need to control your emotions, all that. You spend some of your mental capacities and energy on that, and trading such crap is draining your mental capacity to control yourself in other areas. If this is your edge, if you want to focus on some things like that, of course, as said, you can trade everything. There's an edge in everything if you know what you do, but this is just one pure scam, and you really should know what you do. And as I said, I just don't see a reason to, because you need to play it on low size anyway to have a reasonable risk amount. On what time frame did you cut your current ETH long? What was the time frame? Was the break of structure break on based on? I can show you. I don't know which exchange. Now that I'm not using Maxi anymore, it gets a little messy. Yeah, pretty much pure on the daily time frame. We broke the trend line. I really like to have those trend lines to see the momentum, because as long as the momentum is intact, I see no reason to TP too much. I did here because it's just a perp long, so I really want to lock in gains, and this makes me also be more comfortable holding my spot long. And then you can choose any time frame, like this break of structure here, I TP'd. Then we had this the full break of structure here of this low, which has nothing to do with this trend line anymore, but we broke this low as well. I did a full TP, even though it was on the 4-week level, but this was just my long. So I'm not fumbling my spot back here or anything because my main thesis is still intact. We're reacting from the 4-week hidden, and I just wanted to make sure to lock in the full gains of this trade to be able to reallocate. Should we, or was here, should we nuke another 10%, I can use all this money to open a new position, start fresh, which is sometimes better than round tripping all your gains and then building another position, and you have this one, and then you think of, it's not just about how much money you make, it's about the mental capacity as mentioned, and it's how can you manage your mental game as well as possible with your trades. So as mentioned, I TP'd more on this long than I would normally if this would be my only long. Why? Because these gains made it easier for me to hold my spot idea, which is from here another 30%, and of course on more size. So yeah, this is just also serving my mental game. And as mentioned, trend, and here break of the structure. And even though we are at the same level again, and we might even go higher, that's no problem at all because I've built it with these gains. I've built it longs on some altcoins which corrected a lot more, and I could use those gains to reallocate. It's not just about ETH. You see, you have this nice long on Audi running, which is more or less based on Audi TPs and now ETH TPs, and so I can just reallocate all the time, which is kind of nice. I will probably mute some Twitter accounts well today. I feel they're my main source of FOMO sometimes. Yeah. Make sure you listen to the right sources. I don't follow a lot of people on X because I don't want to be too distracted. And what I see newbies do is they don't focus on their own game. I mean, even though maybe you listen to the right sources, people who are really able to trade and share proof of that and all that, you really have someone who knows what he talks about. But in the end, you still need to form your own ideas. So if you always look for someone guiding you, holding your hand for an idea, and you never trade your own ideas, and the level comes, you will always lack the confidence to execute it yourself because it was not your idea. And then you go on X and you say, oh damn, what is this influencer telling me? Hopefully he does take the trade, and oh no, I'm in the trade already, he's not posting, and then you get fearful and whatever because it was not your idea. It was not your confidence. It was not your knowledge. Trade your own ideas is what I can tell you. Of course, you can learn, inhale all the alpha that's on X because X is really great for that if you have the right sources. But make sure you follow the right people because there are other people who always sound a little smart but never sold the top or never ever got anything right. I don't want to call names, but those people are usually bullish all the time and they back it with charts, but they only back their own bias. So they're not like trading probabilities. They have a bias and they say, oh, it's going higher. And if there is a 60% correction in between, so be it. And I mean, many people said, we are going to go higher. This is happening. But if you didn't sell here, as mentioned, you're back at the lows, or you're even worse, and you paid back 55% on most coins, probably 80 to 90% of your gains, or even more than that. And this is really not helpful to say, oh, it's a higher time frame idea. Of course, I target this as higher time frame idea. And that's nice if you can separate your ideas, but in between there is a 40% correction, a 50% correction. So those people might be right in the end, and in the end they will tell you, oh yes, I was the one who already knew that this is going to happen. But yeah, they always paid their gains back in between. And for most, this is the ruin of the mental game, and as said, mental capabilities and all that. If you're holding throughout those things and you never locked in gains because you always thought it's going to go higher, your mental game will be so wrecked by now, and your portfolio probably as well, because most don't trade majors. Most look at World Liberty Finance coin, which corrects 90% if something like this occurs. So yeah, really listen to the right sources and make your own plans and trade your own ideas instead of listening to other people all the time. I mean, Trump's family project will liberty the scammers. Okay, then I'm not familiar with that, to be honest. Some kind of company or whatever. I I really don't know. Sorry, I have zero clue, to be honest. Uh, Thoughts about Meta NFT season gaming coins like Pixel? Yeah, might be something. To be honest, it's not my idea. I don't know. I have not studied this. And as mentioned, I trade rather bigger coins. As mentioned, Ordi I think Ordi is some kind of ordinals token for on the Bitcoin blockchain for the ordinal NFTs. If NFT is going to soar, ETH will as well. I have some Ape coin for the Bored Ape Club thingy, which I bought at the low. So if NFTs, I bought some crappy NFTs, yeah, which are always also around break even. I bought some Doge NFTs 2 years ago and all that, but I'm not into this shit because I hate on-chain transactions, to be honest. And yeah, I don't see a reason for that. I rather play high conviction plays with more size, and if Doge does like 60 cents or even higher, or at least 30 cents, it's already a 2x. And if I play on size with a 2x instead of a small play on for 10x, for example, I hit a 20x on Pepe, but it was on small size, and so I didn't even make as much money as I made with Bitcoin this cycle. Even though Bitcoin, I sold most of my Bitcoin around 40 to 60K, way too early, looking back now. But I locked in gains, and I still made more money with this Bitcoin trade than my 20x on Pepe, because first of all, Pepe was very small when I bought it, and I thought, damn, it's just a green frog. You cannot put all your money in that. And second of all, even if I needed to trade it with a stop loss, and so my risk to reward in the end, you need a higher. If the coin is more volatile, you need a bigger stop loss. So as said, in the end, it's about RR. So I really care about RR, high conviction plays, high volume, not too much scam, not too much fuckery. Just makes the most sense. As also said here, Doge broke also structure here. I didn't expect a big correction like this. You could have locked in some spot gains here. I did on a long, and it corrected 20%. But the signs were there. So as said, I didn't expect such a big correction, but we're talking still about the meme coin here. And you, as said, you didn't sell the Pico top. Okay, then you sell for 6% lower. Totally fine. And I did that with my long. And if you want to read this to read the momentum, it gets a lot easier for those plays. And the same for gaming coins like Axis and Pixel. I don't have Pixel. I have some Axis spot, which I'm kind of happy with. If I get a pullback, I will long. But as I said, it's not my topic. I'm not into this. I know that Monitor said that. I have some spot from this area. I will probably sell something here because it's already a good gain. And if it goes to very higher time frame, best case targets remains to be seen. If it does, great. If it doesn't, I have locked in some gains. I trail my stop loss. And from a chart perspective, this could definitely be something here, or even way higher. I don't know, but I take it level by level. And as I said, I've not studied these narratives or anything. Not my topic. Great advice about trading your own ideas. Yeah, it really is. To be honest, it really is. Because you really need confidence. You need confidence to take your own trades, to stay in the trade, to take the stop loss, and you can only be confident if you rely on your own abilities to do something. If it's not your own abilities, if you rely on someone else, you always need someone else to do this for you. And of course, guidance in the beginning makes total sense. Learning from the right sources. And to be honest, the hardest part for me, one of the hardest parts for me was to find the right sources, because the space is just full of crap and full of scammers. So if you have the right sources, you're already like 50% done. And then you learn, you adapt, and then you just start trading your own ideas and don't rely on other people. If you don't feel comfortable in your ideas, it's probably because you either lack knowledge or you trade with too big size. Because if you lack knowledge, you still should trade, in my opinion. You should also trade with real money to learn, but it should be amount of money that is not making you feel uncomfortable. Usually people feel uncomfortable with their own trade ideas because the size is too big or they lack knowledge. Make sure everything is fine. You have the right knowledge. You don't trade too big sizes, and then you should be fine to trade your own ideas. One of the things I always struggle is the RR. I usually count my RR in percentage instead. Yeah, you can calculate it like you wish. I mean, if it's 5R and you have a 10% stop loss and a 50% reward, it's still 5R, so you make us 5 times as much best case. How you calculate it is pretty much doesn't matter. But as mentioned, 10% stop loss, 50% gain is great. But if you, for example, trade some shitcoin and you say the risk is 100% because some coins, they can't just rug if it's low volume crap. The risk is 100%, so the position size is your risk, and the potential is 500%. It's still a 5R, but of course you need to be aware that the position size is then your risk. So this is what people don't get. They usually see, well, it could be 1,000% or whatever. But yeah, if let's say the risk is like 50%, don't get me wrong. It's like, yeah, it must be like 20R, which is great, best case. But how often do your trades go to your best case? And how often do you end up taking early profits? And then you might end up with this like a 10-hour trade, a 7-hour, a 5-hour trade, depending. And then the question is, why would you sacrifice your mental capacities to trade such volatile crap? Probably a scam, because most major coins are not completely manipulated, or at least not like have the potential to rug. They don't make 1,000x from here anyway, 1,000%. So RR, as mentioned, 10% stop loss, 50% gain, 100% stop loss, 500% gain. Doesn't really matter. In the end, it's 5R your risk, 5x your risk. Are you holding your spot bags longer than your leverage trades, or are you selling spot plus future trades at the same point? Yeah, as mentioned, I like to have both types of plays, because I TP my leverage plays earlier because they're usually a little short term, and this makes sure I lock in gains every week because I live off trading, so I really need this money. And in the end, these TPs and this money helps me to hold on to my spot ideas for longer, because I really try to push those spot trades as much as I can. How do you plan or choose your coins to chart? I remember there's 20 coins, including Bitcoin and ETH. Can you explain your thought process, TA? This is why I put everything on a spreadsheet I create to check like journal. I'm not sure if I understand the last sentence, but yeah, this is also something I recommend all the time. Focus on just a few. These are basically all the coins I trade all the time. I have something here which I try a new strategy on. I have not so much data on this yet, and it seems to not work on crypto as well as on stocks, but I'm still playing around a little bit. And I have this whole list of crap here, which I never look at because I collected these over the years. And yeah, I really don't care about them. I only care about them, and I look daily at Bitcoin, I look daily at ETH, I look daily at Doge. Since I have this XRP long here, I look at from here on. I look daily on XRP, of course. Spot play, zoom out a bit. Spot play, close to TP, by the way. Spot play. So these, I don't really look at these all the time. I know that my main thesis, if my main thesis is going to play, they will probably do very well. And if my main thesis doesn't play, the risk is very small on them. So the lower we go on this list, the lower the risk gets. And these are the ones I look daily at. And then I have my majors list, which I also look daily. I look at daily. We have the stables. We have Bitcoin ETH dominance. This one I'm looking at the other list. BVOL 24, BVOL, EVOL, others, totals, all that. Even though I don't look at total 3 and others all the time, this is something I do maybe once a week. But ETH BTC became very important. ETH dominance became very important. Total 2, I like to have total 2 ES. And to be honest, these are the coins I check daily, the tickets I check daily. Of course, I have my stock portfolio and watch list and blah, blah. But usually they don't need as much of attention because they're spot plays, higher time frame. I buy them at the right level, I sell them at the right level. Usually it takes, I bought here, usually it takes a long time for those targets to hit, so these don't require much attention, only around the entry and around the exit, of course. And as said, I trade only actively ETH right now, XRP, Doge. I don't trade Bitcoin because Bitcoin is really pretty much doing nothing besides tricking people into fake breakdowns and all that. Yeah, so this is my list. And as said, less is more. Don't split your focus too much. Don't split your attention too much. Make sure you make proper plans for a few coins. And if you know what ETH does, if you know what Bitcoin does, if you know the majors, you know what all other coins are doing. And maybe sometimes a setup is a little more juicy to take than another one. So it's nice to have an altcoin to look at. But overall, as mentioned, I rather stay with those. And in the end, it's about RR. If one coin does 1,000%, I don't care because I can also make 10 hour of a good lower time frame trade if I know what I do. Thanks for this QA. You're welcome. I have fun as well. It's my pleasure. And as mentioned, this is going to happen every week from now on. The last sentence about instead of paying for a journal, I have create spreadsheets to log everything and go back to check my gains. Yeah, that's a good idea. I have also spreadsheets. And what I really like to do, I go on my exchange, for example, and I look at my weekly performance to really check if I wrote down everything correctly. And this is one of the more important parts of the game because usually people don't look at the performance too much. They don't track the performance too much. But if you really do, you will probably see some things that you were not aware of, and maybe it's a little worse than you thought, maybe it's a little better than you thought. But in the end, you should really do this because yeah, this is just the most important part if you want to make money. One more question. If you're identifying a higher time frame, hidden order block, should you check lower time frames to see any wicks are touching the hidden order? And if they are, does that mean it's no longer powerful? I learned this in Dune's group, but I'm not sure how to apply this properly because of at some point there's always a wick inside the hidden order block if you go low enough time frame. Yes. Also good question. The thing is, if it's for example, a weekly order block and some daily blocks block it, I really don't care or touch it, or wicks or whatever. But usually, for example, in this green area, we see FEGs here as well, which makes it just more powerful. Or this little block here, you can use this for refinement, or you can scroll all the way here and see on those look at those time frames. If you find something, you see there's this 1 hour block. But I'm usually not the most refinement type of guy because I think with position management and not over refining and all that, there is so much more to be made, even though this is touched, by the way. I've not seen this, so I cannot mark it. But you know what I mean? So I could mark this little area here, and at some point it just gets a little bit too crazy, in my opinion. So if you have a 3-day, a 4-day, a 12-hour block and all that, I wouldn't bother to go to too low time frames. You were talking about mid time frame, but as you can see, there's just a big FEG here. So this area is very untouched, even though here's not a block. And in the end, all of that touched the bigger block. What was the block? Was it a 2-day or whatever? Yeah, here's the partial. And if I look at other time frames, it's more or less pretty touched. Also, this wick touches it somehow. And yeah, so the question is, which setups can you trade then? I like to refine my setups as well, but for a higher time frame setup, I usually don't go below the 12-hour. I have this hidden liquidity indicator, which shows me the mid time frame blocks, and if I see a lot of time frames like these odd time frames stacking up in this area, I know it's going to be enough for this area to play. And as mentioned, I think with position management, there's a lot more to be done than to over refine those setups all the time. What I see people doing is that they over refine and then they hope for a 500R setup because they say, oh yeah, I can just include this wick. But if I take the setup, for example, I include this little lower time frame stuff here, which is also here the complete close of this lower FEG. And people usually ask me, why do you play this so wide? They did this with the trade here as well, or it was here, which was in the end a 7 hour trade, and like the real R was 7 hour, and the trade R was like 10, 20 hour or whatever. So it really wasn't wide. People are greedy sometimes. And I would always include another part of technical resistance. And if you have time and if you have the knowledge, you can drop to lower time frames once this level hits. You can drop to low time frames once this level hit, and then you can enter on a high R trade very tight if you see the signs of reversal. But this is a little more advanced. So if you're not able to trade those higher time frames properly on wide stops, I would not recommend to drop to lower time frames all the time, even though it's a nice skill to have. Yeah, but as mentioned, stop loss management, position management is, in my opinion, a lot more important than over refinement all the time. Tournament time frame. So if there is a nice block, make sure you manage your position nice, confluence and all that. Okay, guys. Ask your last questions and then I will wrap up the stream because I have a busy day. We are launching the course today and I need to prepare some stuff and breakfast and all that. So 5 minutes, ask your questions if you got some left. And other than that, I would wrap up the stream here. You're welcome. Thank you. Glad to hear that. As said, pleasure is on my side. I really like doing this. It helps me as well to really talk about my ideas and speak them out loud because it also uncovers holes in my own thought process. So as said, pleasure is on my side. Exactly. Teaching is learning twice. Every Saturday stream now, preparing for the next one with more questions. Exactly. So every Saturday from now on, same time, same place. And yeah, bring your questions. Usually I prepare some kind of topic, something that's in my head for this week, something I learned, something I saw. And we can talk about this. And if this is not useful or anything, you can always tell me. This stream is for you guys. It's not about me. And as I said, prepare your questions, bring your questions. I will answer them all if I can. Morning. I've got a question regarding stocks. If I remember correctly, you're from Germany and therefore use a German broker to trade stocks. How do you handle the fact that you check the charts in trading in dollar, which is different than GetX, for example, but then need to trade your exchange, for example, Trade Republic and not the Nasdaq chart? First of all, yes, I'm German, but I'm not living in Germany, and so I don't trade with German brokers. I have Interactive Brokers, which is, as far as I know, in Ireland or in England. I'm not sure, but this is really the best one I found yet because the user interface is nice. It's UK, right? UK. The user interface is nice. The fees are good. The spread is fine. You can trade all assets, all instruments, and it's really the best one I found yet. I have also I live in Georgia, by the way, and I have a Georgian private brokerage service, which is all right for investments, spot investments, but for trading, this is pretty bad because the spreads are bad and not so much instruments, and the user interface is like from 1990. Like many times in trading, the user interface from brokers and exchanges is like really bad. I always wonder why, as almost most advanced like industry should at least, as for the money that flows there. But yeah, so I use Interactive Brokers and I have a private brokerage that you can only have with a Georgian bank account. Yeah, I hope this answers your question. Yeah, and for the different like exchanges and currencies, it's always wise to keep an eye on different exchanges. But for example, if it's an American stock, most volume is traded on the Nasdaq. I care only about the Nasdaq chart. And if it's a German company and if it's the most volume is traded on GetX, and then I will look at GetX and I will try to figure the price, for example, on both charts. If I need to buy it in dollar, for example, because I only have this instrument, but the most volume is traded in euro on GetX, I figure out the same area. Sometimes you will see that there is no area on both charts, and then you really need to think about if you want to trade this at all. But then you measure like 10% to the level, and then you measure it on both charts, and then you have your number usually. Yeah, and Active Brokers is good, and as far as I know, is one of the biggest brokers, and so it should be one of the most safe ones. eToro is probably the exact opposite of that, and it's very expensive. Yes, that's right. This was my first broker as well, but I quit it very quick because, and also eToro doesn't really. So you don't really own anything on eToro. It's just, yeah, it's just, what's the name? Yeah, you just don't own it. You buy a share, a part of like eToro's holdings of that. So if eToro goes bust, you have nothing in your hand. And if you trade with a licensed broker, a big one, you usually have up to 100K depending on your country, which will be refunded, like a safety net, which is also very nice in TradFi, because if a crypto exchange or something like eToro, I don't know about eToro to be honest, but something like that goes broke, you get nothing in the end. IC Global, don't know about that one, might be something. Yeah, and one little downside to interactive brokers, or more or less downside. I mean, I have an international konto here, a bank account, bank account, and I know that my German bank account was not offering any international transactions, at least not easy from my app. So I needed to go to my bank, and then I needed to apply for this, and then I needed to pay extra fees. And here I can just do it from my app because I have a foreign currency bank account here, and I can just send money to America, for example, because in the active brokers bank account, or at least mine, is in America. So it's always you always need to pay some fees. So on small size, it's more fees than money, than like your deposit. But so you need to make one big deposit, best case, then the fees are okay. But this is a little downside. I don't know what's with withdraw, if there's also a fee, but yeah, that's the only thing. But this is not up to interactive brokers. This is because the international bank transfer usually costs something. Is left on brokers always cross? It doesn't work the same way like it does in crypto. In crypto, it looks more difficult, but in the end, you have really more options to adjust your own trades, which in my opinion is a lot more handy, a lot more convenient. And usually on a broker, you trade some CFD, which is predefined. So you have a predefined margin that you need to open the position, and then you have a predefined leverage. And you also can trade options and all that, but it gets very quick, very complicated. So CFDs are probably the way to go. And I don't know about IC Global and how it works, but I know this is at least the case for my brokers. Generally speaking, even though you just said it doesn't affect you anymore since you live abroad. So let's say you want to trade NVIDIA, you charge the stock and trading view on the NASDAQ. Since you then need to trade it on a different exchange, Trade Republic, you just need to calculate the difference. I realized that on NASDAQ chart sometimes there's a difference. OB, for example, then on the GetX chart, you know what I mean? Yeah, exactly know what you mean. And this is what I meant with maybe you will figure that if the level is not on both charts, and for example on GetX, the volume is also high and it looks different, you might as well want to adjust your level, or you invalidate your idea and all that. But usually if you trade, for example, NVIDIA, which is an American stock with the highest volume on NASDAQ, you can just trust NASDAQ. And if the level is 10% away, you calculate 10% from your euro price, even though there might be no level at this area or different level, you still can like calculate these 10% and then know where your entry is going to be in euro. But then you also need to adjust for like the currency volatility, which is usually not intraday, but if you hold the position for longer, of course, this changes a little bit. I realized that on the Nasdaq chart, sometimes there are different. I don't know. I read that already. Okay, makes sense. I appreciate your time. Cheers, mate. Yeah, you're welcome. And that's it for the stream. Nice that you guys were all here. I hope you learned something new, and I wish you a great weekend. Bye bye.